Ring a ding dong, everybody. Hello and welcome to today's tips video. In today's tips video, we're going to be talking about how I identify trends, how I trade the trends, and understanding the concept behind it. All right. If there's one thing I want you guys to get out of this video, it is this. There are hundreds of ways that traders use to determine trend. What is important is that you stay consistent with whatever way you decide to determine an uptrend, and a downtrend, or even a sideways market. So we need to have rules in place that make sense for you. There are hundreds of ways. There's, moving averages. There's traders like that say they slap on a 200-day moving average, and if price is below the 200 moving average, then we're in a downtrend. And if it's below the price, then it's in an uptrend. There's people that use just higher highs and higher lows and lower highs and stuff like that. There are hundreds of ways. So whatever way you choose in your strategy or supply and demand strategy is you stay consistent with it. And you have a very rule-based strategy. So if I ask you, what is your rule for an uptrend? You could tell me and I could pull up any chart and you could say that's an uptrend, that's a downtrend, that's a sideways market. All right. So what's important is that you are consistent with whatever way that you determine what is an uptrend or what is a downtrend or what is a sideways market. That is one thing that I would want you guys to come out of this. Doesn't mean that you come and trade my methodology for how I determine trends. This is a topic that I could talk about for literally, I'd say like an hour and a half straight. I just came out of a meeting for an hour and a half with the group talking about trends. So I'm a little trend out, you might say. All right, let's just get right into it. Enough talking, okay? What is an uptrend? Let's talk about that. An uptrend, in definition for my strategy, is demand zones being respected and supply zones being removed. That is the definition of an uptrend. I'll repeat that again. You could write it down on a piece of paper if you want. An uptrend is when demand zones are being created and respected. So let me repeat that again. Demand zones are being created and respected, and supply zones are being removed. So in an uptrend, we remove supply zones and we respect the demand zones. We don't remove demand zones in an uptrend. It's the same thing for a downtrend. A downtrend is supply zones created and respected. We remove demand zones in a downtrend and we respect supply zones in a downtrend. We don't remove supply zones in a downtrend. All right, if we do, well then we're going to start going into a sideways market because we don't remove supply zones in a downtrend. Make sense? That's basically the definition of it. Now, how we determine if price is in an uptrend, well, let's talk about uptrends first because we're looking at an uptrend based on my strategy. So now that we know the definition behind what's a downtrend, what's a uptrend, and what's a sideways market, what a sideways market is basically when price is respecting both supply and demand zones and therefore going in a range. So here, for example, there are two ways we determine that price is in an uptrend. One, we remove two supply zones, or the second way is we remove one supply zone and we have the ability to draw an upward momentum line. Like that. We're basically just picking swing highs and swing lows, like higher highs and higher lows, like this. Right? I'm not going to get too much into the methodology about this. I could later in the future, but in this case, we have removed one supply zone and we've created higher highs and higher lows after creating it. So for me personally, that would be in an uptrend. A downtrend, for example, well, let's see, gold. Now I see this as a sideways market. Why? Because we removed this drop-based drop supply zone. Now, if you don't know what drop-based drops or what the 4 patterns we trade, go into the start of the tips videos playlist that I created and go through. So we removed a supply zone here. So we just created a demand zone, therefore, okay? And we have supply up there. So right now, we are in a sideways market. So how would I play this? Well, I would want to be buying here and selling up here. Or I should say looking for selling opportunities up here and buying down in demand. Right? Just saying if we're in a sideways market, we should play the range, right? I think there's a chart that is CAD Swiss. Yeah, CAD Swiss on the monthly time frame has literally been in a range since 2015. Here is the high of the range, and here is the low of the range. I'm not sure about you, but clearly when I look at this chart, I see demand down here. Every time prices come down here, buyers have been stepping in, and supply is up here. Anything in the middle is just lower probability. I would personally want to wait for the extremes and trying to sell up here and personally buy down here. Okay, let's check out oil. Now oil, what do we have here in oil? We have a downtrend on oil. Why? Because we are removing demand zones. We are removing demand zones and we are creating supply zones. Drop, base, drop, base, drop. So we clearly know we're not in an uptrend, so we must be in a downtrend by creating all these supply zones, and we're removing these demand zones. Makes sense, right? So if we actually go back for this, just for example, and we ask ourselves, what was the trend at this point right here? Well, I tell you what, you don't need to look anything back here. Most of my analysis and all my trading is done within this period right here. It's done in this 1/3 of the chart. I rarely look here or even back here. Most of my analysis will be done right here. Everything that I need to know if it's in an uptrend, downtrend, sideways market is I look right here. So with that said, I clearly see that prices have been removing demand zones here, demand zones here, here. All the demand zones have been getting removed. So clearly supply is being respected and demand zones are being removed. Remember, that's a definition of a downtrend. And we clearly have removed more than 2 demand zones, and we have the ability to draw a downward momentum line. Right? So we are in a downtrend here. Let's go into detail about, let's talk about EURUSD 1 hour. Here at this point, we're in a downtrend. It doesn't matter. We're still in a downtrend. Why? This was a supply zone. We are removing demand zones, demand zones, demand zones, and we are respecting supply zones. So in this case, we would be in a downtrend, okay? Okay, so that pretty much sums it up. If I had to quickly talk about that again, what is a downtrend? A downtrend is when supply zones, this is the definition that I have in my rules. A downtrend, supply zones are being respected and demand zones are being removed. An uptrend is demand zones are being respected and supply zones being removed, okay? A sideways market is when both supply and demand zones are being respected. Those are 3 definitions that I have in my plan, okay? And then I have another section right below it that says, well, how do we determine if price is in an uptrend? Well, then I have 2 rules. Prices can be in an uptrend if 1, we remove 2 supply zones, or the second way would be if we remove 1 supply zone and we have the ability to draw an upward momentum line or trend line. Okay? I call it momentum line because we don't use the trend line to determine trend. We use it to determine momentum. Okay? And then a downtrend, we would need the exact same thing but just reversed. For a downtrend, we need 2 demand zones being removed, or we need 1 demand zone being removed and the ability to draw a downward momentum line. What I just said right there in the last minute with the definitions and what I determined, you could write them down, and those would be my rules. Heck, I'll throw them in the notes. Screw that. I'll do the work for you guys. Okay, I'll put them in the notes below. So the last thing I really wanted to quickly talk about is, well, how do we trade these trends, right? So typically, if we're in a downtrend and we respect supply zones and remove demand zones in a downtrend, well, when prices come back up into a supply zone, I want to be looking for selling opportunities. Why? Because we're trading with the trend, and so we're looking for that next big impulsive move down. Because in a downtrend, we remove demands and we respect supply. So if we're in a supply zone, we should be looking for selling opportunities, right? And it's the same thing for if we are in an uptrend. If we're in an uptrend and prices are coming back down into the demand zone, well, you should probably be looking for the next impulsive move up, right? Because once prices come and touch that demand zone, we could not assume, but yeah, we could, take a probability based guess that prices are going to touch the demand zone and go off and break the next supply zone, because in an uptrend we remove supply zones and we respect demand zones, right? Makes sense. Now this doesn't work all the time. I think we can all agree that trends change, and in fact trends change from inside out. This goes back to Newton's law. An object in motion will stay in motion until or unless an opposing or larger force comes against it. That will be a higher time frame. Now, I don't want to get into this now because that's the next tip. That's going to be another tips video, is talking about multiple time frame analysis and stuff like that, and we'll integrate trend talk with that. But typically when you enter a supply zone, you're going to see on the smaller time frames demand zones getting removed. So if you quickly look here on the 1 hour, we're sitting in the supply zone. If I go down to the 15-minute, you're going to see a lot more candles in here, and you're going to start seeing smaller demand zones. Here on the 1 hour, you don't see demand till at least down here. You go to the 15-minute, you're going to see demand in there. Watch. See? You're going to see this demand zone getting removed. This goes back to my confirmation tips video. So I hope if you've been listening to these tips series, you can start putting the puzzle together, saying, oh, I finally kind of understand what he's talking about. But for trends, let's just quickly keep it on trends this episode. Remember, if you want to be buying in an uptrend, you want to be waiting for price to come back into the demand zone. And if you want to be looking for selling opportunities, you want to be waiting for that downtrend and waiting for price to come back up into the supply zones. All right, but I basically think we covered it, man. We talked about how I identify it, how I trade it, what is the concept behind it. Just remember, there are hundreds of ways that traders will use to determine trend direction. What is important is that whatever way you decide to choose is that you stay consistent with it. Okay? So that's it. Just gonna end it there. If you guys want to join the group, join the group. It's awesome, man. We're killing the game in there. And if you guys want the 5 free odds enhancers, just go down below to the website, moneyballtrading.com. Will be a link, and you guys can collect your 5 free probability worksheets. It's just like that. Talks about trend in there too. All right, cheers, guys. Thanks for watching. Bye-bye.